stock market news update. Oil and gas prices jump, Meta stock, Apple stock, and UAW strike. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Thank you for choosing to watch this video, or for choosing to watch more videos about the latest updates in the stock market. Please consider liking and subscribing. Now, let's jump into today's stories. Presently, investors are concerned about the potential economic impacts of increasing interest rates and the potential spread of the Israel-Hamas conflict to new regions. At the moment, the stock market is heading towards its third consecutive month of losses, marking the longest monthly losing streak since the initial outbreak of COVID-19 in 2020. The World Bank has cautioned that a significant escalation of the Israel-Hamas conflict, potentially extending to a broader Middle East conflict, could result in a substantial surge in oil prices, possibly reaching as high as 75%. Despite the conflict starting on October 7th, energy prices have, for the most part, remained stable. Economists and policymakers have been closely monitoring the situation, examining past conflicts in the region to assess the potential economic impact if the current conflict intensifies and spreads throughout the Middle East. The World Bank's recent study suggests that such a crisis could coincide with disruptions in the energy market already caused by Russia's war in Ukraine, potentially worsening economic consequences. The World Bank's chief economist and senior vice president for development economics pointed out that the latest conflict in the Middle East comes on the heels of the biggest shock to commodity markets since the 1970s. If the conflict were to escalate, the global economy would face a dual energy shock for the first time in decades, not just from the war in Ukraine, but also from the Middle East. The World Bank projects that global oil prices, currently hovering around $85 per barrel, will average $90 per barrel this quarter. Previously, the organization had anticipated a decline in prices for the following year, but disruptions to oil supplies could significantly alter those forecasts. In the worst-case scenario, similar to the 1973 Arab oil embargo during the Arab-Israeli War, a severe disruption could remove up to 8 million barrels of oil per day from the market, sending prices as high as $157 per barrel. A less severe but still disruptive outcome, akin to the 2003 war in Iraq, could reduce oil supply by 5 million barrels per day and push prices up by as much as 35%, reaching $121 a barrel. A more modest scenario, resembling the 2011 civil war in Libya, could result in a loss of 2 million barrels per day in global oil markets, with prices rising by as much as 13%, reaching $102 per barrel. World Bank officials have cautioned that the impact on inflation and the global economy will depend on the duration of the conflict and how long oil prices remain elevated. If higher oil prices persist, it could lead to increased prices for food, industrial metals, and gold. Efforts by the United States and Europe to prevent a spike in global oil prices following Russia's invasion of Ukraine have included imposing a price cap on Russia's energy exports to limit Moscow's oil revenues while maintaining oil supply. Additionally, the Biden administration has utilized the Strategic Petroleum Reserve to alleviate oil price pressures. There is potential for further releases from this emergency stockpile of crude oil stored in underground salt caverns near the Gulf of Mexico, as President Biden considers authorizing additional releases. Notably, the Biden administration has downplayed concerns about the economic impact of the conflict, stating that it is too early to predict the consequences. To echo this sentiment, Treasury Secretary Janet Yellen emphasized that oil prices have remained relatively stable, and there are no immediate signs of the conflict having widespread global economic repercussions. In other news, Apple, a leading consumer electronics company, has faced 3 consecutive quarters of declining sales, which has had an impact on Apple's stock performance. The release of the iPhone 15 series is expected to boost the company's growth prospects. However, potential investors may be pondering whether AAPL's stock is currently a wise investment. Apple, headquartered in Cupertino, California, unveiled its iPhone 15 lineup during a media event on September 12, alongside the introduction of its Apple Watch Series 9. The product launch was rather uneventful, as much of the information had already been leaked prior to the event. On the day of the introduction, Apple's stock saw a 1.7% decline. The iPhone 15 lineup consists of 4 versions, including 2 standard models and 2 high-end Pro models. The premium models come with notable new features, such as an upgraded processor, and a redesigned build featuring a titanium frame and customizable action button. The highest tier model, the iPhone 15 Pro Max, features a 5x optical zoom camera with a tetraprism lens. These new smartphones became available for purchase on September 22nd. As Apple's iPhone business matures, investors are on the lookout for the next major growth driver for Apple stock. Two areas that have recently boosted Apple's sales and profits are services and wearables. In the June quarter, Apple's services revenue increased by 8.2% year-over-year, reaching $21.21 billion, while hardware sales decreased by 4.4% to $60.58 billion. In addition to the services sector, Apple's wearables, home, Beats headphones, and the Apple HomePod wireless speaker, among other miscellaneous gadgets, have contributed. Apple entered the wearables market with the introduction of its much-anticipated Apple Vision Pro mixed reality headset on June 5th. This innovative device combines virtual and augmented reality, and is set to be released in early 2024 with a price tag of $3,499. The headset is designed for various applications, including entertainment, communications, and productivity, and it utilizes video pass-through technology to seamlessly integrate the real world into virtual and augmented reality experiences. Overall, Apple's financial performance has been mixed. In its fiscal third quarter, the company surpassed Wall Street's earnings expectations but met sales forecasts. However, its outlook for the current quarter was weaker than anticipated, leading to a 4.8% decline in Apple stock in the subsequent trading session. It's worth noting that the next earnings report for Apple is scheduled for November 2nd, which could impact the performance of Apple stock. If you're an Apple stock investor, be prepared for some volatility. Moving on to today's stock news, we have Meta Platforms, the parent company of Facebook. The company recently announced plans to offer users in Europe a subscription option that allows them to use Facebook and Instagram without advertisements, in compliance with European Union regulations. The monthly subscription plans for users in the EU, European Economic Area, and Switzerland will be priced at €9.99 for web users and €12.99 per month for iOS and Android users. These regulations could limit Meta's ability to personalize ads for users without their consent and affect its primary revenue source. Meta has faced antitrust pressure in the EU and recently lost a legal battle against a German data protection order. By providing users with a choice between a free, ad-supported plan and a paid, ad-free subscription, Meta aims to navigate regulatory challenges without significantly impacting its ad-based business model. Meta, formerly known as Facebook, was previously fined €390 million by Ireland's Data Privacy Commissioner, and was barred from using the contract as a legal basis for targeting users with ads based on their online activity. The company has now expressed its intention to obtain users' consent in the EU before allowing businesses to target ads, in compliance with evolving regulatory requirements in the region. In other news, Stellantis, the owner of Chrysler, has become the second Detroit automaker, following Ford, to reach a preliminary agreement with the United Auto Workers Union after a 6-week strike. This agreement, similar to the one with Ford, reportedly includes a 25% pay increase for full-time employees and cost of living allowances. However, the union has expanded its strike to General Motors plants as negotiations continue regarding temporary workers, who can constitute up to 10% of GM's workforce, according to Bloomberg. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!